Most traders use RSI the wrong way, and then blame the indicator. But in this video, you'll learn how to use RSI the right way, using multi-timeframe analysis. We'll break down a powerful trend-following strategy that shows you exactly when to enter a trade, and more importantly, when not to. And at the end, I'll share one high-impact tip that makes the setup even stronger, so be sure to stick around till the last minute. Why use multi-timeframe analysis? Multi-timeframe analysis is a powerful tool that helps traders stay in sync with the dominant trend and find high-probability entry points. The higher time frame gives us the overall direction. The lower time frame helps us fine-tune our entries. This combination improves accuracy and reduces costly mistakes. Because smart traders don't just trade what they see, they trade what's aligned. Determining the trend. In this strategy, we use the RSI 50 level on a higher time frame, such as the 4-hour or daily chart, to determine the main trend. If RSI is above 50, we consider the trend up. If RSI is below 50, we consider the trend down. Once we know the trend from the higher time frame, we move to a lower time frame to search for entry setups. Entry signals on the lower time frame. As mentioned, the lower time frame is where we determine our entry signals. In this strategy, we typically use the 15-minute or 1-hour chart for entries. While most traders rely on the RSI 30 and 70 levels to generate signals, this strategy focuses on something more dynamic: trendline breakouts and pullbacks on the RSI itself. We draw a trendline directly on the RSI. When the RSI breaks this trendline, it's a potential entry signal, but don't rush in just yet. After the breakout, allow the RSI some time to retest the broken trendline. This pullback acts as a confirmation that the breakout is valid and that the move has strength. Entering at the pullback point gives you a much higher probability of success and helps you avoid false breakouts. Step-by-step strategy. Bullish setup. Let's begin with the bullish setup. First, we look at the higher time frame, either the 4-hour or daily chart. If the RSI is above the 50 level, it tells us that the market is in an uptrend. This gives us a bullish directional bias. Next, we move to a lower time frame, such as the 15-minute or 1-hour chart, to look for a precise entry. On this lower time frame, we draw a downtrend line on the RSI, not the price. This means we connect the lower highs, the peaks, on the RSI to form a descending trend line. We're waiting for RSI to break above this descending trend line. But we don't enter the trade just yet. We need confirmation. We wait for a pullback, where RSI returns to test the broken trend line from above, but does not fall back below it. If RSI respects the trend line during the retest and then starts moving upward again, the breakout is confirmed. This is our signal to enter a buy trade, in alignment with the uptrend seen on the higher time frame. By combining higher time frame direction with lower time frame breakout confirmation, we increase the quality of our setups and avoid counter-trend trades. Step-by-step strategy. Bearish setup. Now let's break down the bearish setup. Just like before, we begin on a higher time frame, the 4-hour or daily chart. If the RSI is below 50, it means the market is in a downtrend, and the sellers are in control. This gives us a bearish bias. Now we go to a lower time frame, like the 15-minute or 1-hour chart, to find our trade entry. This time, we draw an uptrend line on the RSI, connecting the higher lows, the rising troughs. This forms an ascending trend line on the RSI. We then wait for RSI to break below this ascending trend line. But again, we don't enter yet, we wait for the pullback. During the pullback, RSI comes back to retest the broken trend line, but does not move back above it. If RSI touches the trend line and then drops again, the breakout is confirmed. This is our opportunity to enter a sell trade, in harmony with the downtrend visible on the higher time frame. This strategy helps filter out weak setups and keeps you trading with the dominant market direction. For risk management and setting your take profit and stop loss levels, make sure to follow the guidelines I explained in previous videos. If you're not familiar with those rules, just drop a comment, I'll be happy to explain. If you found this video helpful, don't forget to like, leave your thoughts or questions below, and subscribe for more smart RSI-based trading strategies. Thanks for watching, and I'll see you in the next one.